US and China have done. They've gone ahead and imposed trade barriers on some products. And while it may not have a direct impact or a meaningful impact on equity markets by and large, fundamentally it may not have had an impact on Indian companies. Specific companies like Motherson Sumi, who supply to companies across the globe, may face some backlash. Joining us to talk about this impact, this very impact, is Vivek Chaand Sehgal, the chairman of Motherson Sumi, and joining in for this conversation is Darshan Mehta. Darshan, over to you.
Yeah, Neeraj, so our guest needs no introduction, Vivek Chaand Sehgal. First of all, good morning, Mr. Sehgal. Thanks for joining us. Can you give us a sense of the global environment with issues related to the trade war that's going on? You have significant exposure to the global market. What's your assessment?
Oh, well, I think, of course, there is a lot of tension and there is a lot of concern. But as far as our business goes, we have seen that eventually when you've got to buy a car, you've got to buy a car. It's not really a luxury or something, it's a necessity. So I am pretty sure that whatever, if any, of the disturbance that comes would only be very, very temporary if it comes. But I personally feel that it's business as usual. There is going to be some impacts here and there. But overall, within the next, say, within a month, 2 months, everything would be fine. And there's a lot of posturing at the moment. But I've yet to see it get translated into, taxes and things like that.
I agree with your point, Mr. Sehgal, that demand will be there, but the point is that money will move, cars will move into competition, people will buy other cars. Considering this, do you think that your FY20 target of $18 billion will be impacted due to trade wars, as preference for brands will obviously change because of tariffs?
On the contrary, I mean, I don't want to sound very this thing about it, happy about it, but what actually happens is that the more the confusion, the more the opportunity, really. So in times of pressure, in times of commotion, Motherson actually gets that much more opportunities. So we are that much more sure that 18 billion for sure is not an issue at all.
Do you have an issue with what's the current situation with Volkswagen? Significant amount of news flow. Since you deal with them directly, what's the sense that you're getting?
Well, I think it's only to be seen. I mean, those people have paid everything, yes. There are certain countries which want to talk about it more. So that is going on. But it's got no new... how do you say, not that I've heard of anything new about any of the news and all that. It's just the old cases, so it'll continue.
Mr. Sehgal, the performance of your subsidiaries SMR and SMP was rather weak in the fourth quarter. What outlook can you share for us now?
I think basically the performance of both of them are very good according to our standards. We are following exactly what the customers are telling us. And you see, we don't supply anything into the open market or something. So tepid performance according to whom, I don't know. But as far as we are concerned, we are moving absolutely as against the budget of our targets. And we are very happy with their performances. There is a little bit of startup issues and things like that, but those particular things are taken in the game, and we have to sort of make sure that we don't miss out on any of the deliveries or anything of the sort, which we are not. So we have 3 new plants rollouts. These particular plants are very important for us because, as I told you, they add 1 billion euros to the top line. At that particular time, I do not know, but at that particular time, the fourth quarter, they were saying that, this performance has not come through. But if the customer is not making the cars, and we have to go through the setting up of the plant and everything, I didn't understand the logic, but anyway, that's the way the market is. We are okay with that. We don't have any issues.
Okay, the other part is the China joint ventures. It's recent, but can you share us some progress of what's happening there?
I think China is following its natural course. We took over PKC, and with that we got two new joint ventures over there. Both of them are very, very exciting for us because they open up tremendous amount of possibilities. You see, PKC is into wiring harness this thing, but Motherson is also very strong in the interiors and exteriors for trucks and things like that. So we had recently, all our collaborators had come in to see what we have in India. And just the mere fact that they saw the kind of excellence that Motherson does in so many components over here is very, very exciting for them, and they've all gone back very charged up. So I think in the coming years, you are going to see much more than just wiring harnesses on the Chinese vehicles than Motherson is only into wiring harness, but also making plastic parts into interiors, exteriors, you name it. We'll be doing almost a lot of things over there. So it's very exciting for us.
Okay, we spoke about the global business. Can you share some update on how the India business is panning out for you?
See, India is doing very well. Once again, I'll repeat myself. We are an OEM supplier, 100%. So in that particular sense, what happens is that as our customers are doing better and better, we are also doing better and better. We have the biggest growth engine for Motherson is increasing content per car. We are increasing the content per car. There are new things that are coming in, new opportunities, new cars are much more on the upper side of it. So in the sense, people are going up the value chain, and that opens up tremendous amount of opportunities for Motherson as a group. So we're very excited with what's happening in India as well.
Okay, so can you give us more indication of the capex that's been planned for the year and any new factories that you're looking to set up?
So, as I said, that we are almost through as far as our major capexes are concerned. So there might be a maintenance capex as such, and a few top-up of capexes will be there. But we don't anticipate any major capexes for this year and probably the next year, unless we get a major order for which we'll have to set up plants.
Okay, and my final question before we let you go, sir, is what's the order backlog currently, and what's your sense of the pricing power in the auto ink industry currently?
So I think, there are a lot of opportunities that are coming up. The pricing doesn't have any pressure at all. If there is anything on where we feel that the pricing is not good for us, we don't take it because we have to set up new plants and things like that. So we are very sure and very positive. We are getting a huge response from the customers as well. The kind of products that we are making are very, very important products for the car. They're the aesthetics, they're the interiors and the exteriors and all that. And we don't see any sort of pricing on pressure or things like that coming on to us. So we are very sure that the kind of orders that we have are already in the bag. And whatever new orders that we are taking it on our terms, really.
Okay, we'll leave it at that, Mr. Sehgal. Thank you so much for speaking to us.